Fox Business Alert 27. That is how many times the word tariff appeared in last night's Apple earnings call. But despite executives fielding so many questions about the tariff war, analysts were left with more questions than answers. When talking about the company's fiscal third quarter forecast, CEO Tim Cook kind of gave a vague response. I mean, you can't really blame him, but here's what he said, quote, "We are not able to precisely estimate the impact of tariffs as we are uncertain of potential future actions prior to the end of the quarter." Well, Wall Street analysts responded with a flurry of price target cuts and downgrades. Citigroup and JP Morgan both cut their price targets from 245 to 240. Stock is at 204 right now. TD Cowen cut its price target from 290 to 275. Jefferies downgraded the stock from a hold to an underperform. But you know what? The greater group of Apple analysts, and there are a lot of them, still call this stock a buy. Not Craig Moffett. In his first interview since Apple earnings, Moffettnathanson Research co-founder and senior analyst has had a sell rating on Apple since January and a price target of all the way down to $141. Craig, what did you see, let's call it back in January, that had you telling investors to dump their Apple shares?
Well, hi, Liz. First of all, good to be here. There were a couple of things, right? First, there was simply the valuation of the stock. I mean, this was a stock that back in January was trading at significantly above 30 times earnings with a PEG ratio that was more than double the rest of the Mag 7. So it was already, to us, an overvalued stock. It's at the slowest growth rate and the highest multiple in Mag 7 at the time. But it was also, there were a whole series of risks that simply weren't priced into the stock. And I still think that's the case, right? There was a judgment yesterday or day before yesterday in the Epic Games case.
Sure.
But there's a much bigger issue looming with Google and the payments that Google gives to Apple that a judge has already found to be illegal. And those payments are 20% of Apple's operating income. And then you had, at the time, the tariff risk that has now at least started to materialize. I agree with what Tim Cook said, that we can't precisely quantify it either, but it's clearly a significant risk. And you also have the declining sales in China. So, look, I don't mean to sound like an uber bear on Apple.
You're allowed.
I really respect.
You're allowed, Craig. We like certainly contrarian opinions. It's important not just to have a bunch of people genuflecting to a certain company on any given day. But what I think is interesting about this is a couple of things. Number one, you're not just saying the tariffs are an issue, although you have pointed out that Apple is the most exposed and that the tariffs have sucked a lot of oxygen out of Apple's room, correct? But also this issue about AI and how behind it feels you perceive that Apple really is. How so? I mean, they did promise, gosh, was it back in June? They unveiled Apple Intelligence. Where is that? Is that getting any traction?
Yeah. You know, it's great. You said it sucks all the it sucks all the air out of the room. That may actually be a good thing for them, because talking about tariffs redirected the conversation from what otherwise is a really difficult conversation about how far behind they've fallen in AI. It is now clear, and it's been well covered in the press, that a lot of what they presented at their Worldwide Developer Conference last June was vaporware, and they weren't close to being ready to actually put it on phones. Remember, the basic premise here, Liz, is that the AI functionality is going to require a hardware and that is a memory and a processor upgrade for the handsets, and that's going to drive a big handset cycle. And then second, perhaps that you're going to be able to charge for it separately. Well, that handset cycle that a lot of people at the time last year thought was going to start in September of 2024 now looks like it's not going to happen even in September of 2025 and possibly 2026. But it's not clear that there's going to be handset cycle at all anymore. And it's also not clear that there's a path here for charging for agentic AI, because there's a lot of people out there developing models that give it away.
Did you see the headline in the last, I want to say, hour? Apple Intelligence is teaming up with Anthropic, which of course is a very big AI platform, to build AI-powered vibe coding. I'm not sure what vibe coding is. I'm not very bright in that area, but does that help them at all to kind of slap the Anthropic emblem on their shirt?
Well, remember, they've already got the OpenAI emblem on their shirt. That they struck a deal with OpenAI for ChatGPT last year at the WW, or just ahead of the WWDC in June. So look, it's fine. I mean, they also have deals in China for Chinese AI models. All that's fine. The real question is, it's not really a techie question, but how much of it is going to happen on the device and how much of it's going to happen in the cloud? Because if it happens in the cloud and it's on somebody else's model, you're not really driving an upgrade cycle or any particular need to buy a new phone. So on the one hand, if you're Apple, you need to have partners that are credible and that help solve the problem of being far behind. But you also have to be cognizant of the fact that you need a model that's going to drive people to upgrade their devices, because at the end of the day, you're a hardware company.
Okay, exactly. So about that, do you think that because there are so many upgrades constantly coming from AI that maybe in a year or two, this whole model of the guaranteed people have to upgrade with the latest iPhone may eventually disappear and go away? And where does that leave Apple? I mean, they do have a great, obviously, service revenue business, although they hit a record for this past quarter, but they still missed analyst estimates.
Yeah, let's go back to the DeepSeek moment that scared the whole market at the end of last year. The real insight from the DeepSeek moment, remember that was the Chinese model that was small footprint, for Apple was that if you believe that there is going to be an agentic functionality on your phone that demands a better processor and more memory, well, DeepSeek arguably made that, at least called that into question, and said a small model with a relatively small footprint may be able to solve this problem reasonably well. That, on the one hand, that's great news. And if you're Apple, you're not spending a lot of money to build these big foundation models. But on the other hand, if you can do it with the existing hardware and the existing memory footprint, you don't need to upgrade. And if you don't upgrade, then the entire premise of how Apple benefits from this gets called into question.
So what do you like? You've got this sell rating on Apple. What is your preferred stock right now?
Actually, you know what? It's funny. I like a very cheap stock, and it will expose me as a value investor at a time when value investing seems to be out of favor. But Charter Communications, CHTR, is a remarkably cheap and attractive stock to me. The market, it has very low expectations. The market believes that cable and Charter are going to lose the convergence wars. The evidence suggests exactly the opposite. They have a better footprint, much bigger footprint for convergence than, say, AT&T or Verizon. In fact, bigger than AT&T, Verizon, and T-Mobile combined in their converged footprint. The losses for broadband subscribers are slowing and stabilizing. And what's most exciting about this, Liz, is their free cash flow will explode as their capital spending decelerates by $4 billion per year over the next 4 years. And you end up with a company that, by our estimates, is doing $100 a share of free cash flow in 2028, and it's trading below $400 today. It's just a remarkably cheap stock and a really compelling story. It's
at 385 and change right now. I'm looking at the forward PE 10. Very, very fine. That's something Buffett would love to see. We're going to talk about Buffett just later in the show because his big shareholder meeting is coming up. But Craig, wonderful to have you. Thanks for coming on.